Managing a kitchen, it's an exercise of passion and discipline, unlike any other. My name is Omar Pereni, and I'm going to teach you all the basics of food costs today. At the end of this session, you will learn what is food cost and what is the difference between food cost and cost of goods sold. You're going to learn everything about inventories, purchases, credits, transfers, waste, and why is that all so important. Let's start by breaking down some basic definition. What is food cost? Well, food cost is the ratio between how much we spend in raw materials to make a dish and how much revenue we created by preparing or selling that dish. That's one thing you really need to know about food cost. Now, the other one, which is very, very important, is that it's one of the two biggest expenses in the restaurant business. And more importantly, you as a chef, as a kitchen manager, or as the owner are able to control it. Okay, let's take a look for a moment at the dollar breakdown in the restaurant. So let's think about it this way. For every single dollar that we make in revenue in our restaurants, it breaks down as follows. First, we have cost of goods sold that we're talking about today, and that's gonna range between 25 and 33%. The second one, as part of that prime cost, is labor costs. Your labor cost also ranges between, say, 25 and 30%. So we're just talking between those two combined, somewhere between 60 and 65 cents on each dollar. So it is a huge deal. Like I said, the two biggest expenses in our industry, and as chefs, kitchen managers, owners, we are responsible in managing those costs. Well, now that we understand why is this so important, let's break it down into two separate types. One is your item cost, and the other one is gonna be your period cost, or what type of cost do we have in a restaurant in a certain period. Well, let's start with menu item cost. Menu item cost is just the cost of the ingredients that are part of a certain recipe. So if we were making a grilled cheese sandwich, you would have your bread, you would have your cheese, and you would have perhaps some butter, right? So we're gonna add the cost of all the ingredients that are part of this recipe. And let's say, for the sake of this conversation, that number is $2.5, right? $2.50. So that's our cost. And so if we want to determine our menu item cost, we're gonna divide that cost by the sales price. So grilled cheese sandwich, let's say we're selling it for $10. So $2.50 is our cost, divided by our sales price, that is $10. Our cost is 25%. Now that we know a menu item cost, let's think about how menu item cost is utilized to determine our pricing strategy. So to price your menu items, we have three different things to consider, three different aspects, right? One is your cost, like we just said. So if you want it to be at 25%, like the grilled cheese exercise, you have $2.50 in cost. And you sell it for $10, so that's 25% cost, right? That is that one aspect. The second aspect is how we compare to the market. We wanna know what other restaurants are charging for that similar grilled cheese sandwich at if they're in our same, say, price point, right? We wanna make sure that we're competitive. So we need to take that also under consideration. And then the third aspect is gonna be your menu mix. What do I mean by menu mix? So if you have, say, a chicken breast item in your menu and you have a beef tenderloin, or say you're a steakhouse, right? Most of your menu items are, say, between $35 and $45. They're high dollar items, they're steaks, right? And so let's say you have a chicken breast product in your menu, and if you price that chicken breast just based on cost and market comparison, you'll probably be pricing that chicken breast at $18. Now, if you look at the third aspect, which is menu mix, you don't want to have that low-hanging fruit in your menu. You don't want to have that one item that sells for $12 or $18, and then the rest of your items sells at $35, $45. So basically, taking under consideration that third aspect, we're gonna try to keep that chicken breast product closer in price to the rest of our menu. So say 28. So those are the three aspects, and you gotta consider them all three. Just keep this in mind. In food costing or in menu pricing strategies, it's not all about percentages. Guys, you don't take percentages to the bank, basically. So, you really need to look at your food cost percentage. Yes, you wanna stay between, say, 25 and 33, but also you need to think about your cash contributions. So sometimes you have items with higher food cost percentage-wise, but also those items are contributing a lot of money to your bottom line. So if you have a ribeye, say, you have a 50% food cost. You buy it at $25. You're selling it at $50. So you're making $25 instantly by just selling this product. And if you compare that to, say, your grilled cheese example, you're only making as a margin $7.50. So see how there's a difference? So it's not an exact science, it's art. So menu pricing is kind of an art, and I want you guys to take those three aspects always under consideration. Now that we talk about menu item cost, let's understand what cost of goods sold is, or how can we calculate the food cost or the cost for a certain period in our operation, restaurant, hotel, whatever it is. And so how do we figure that out? What is our cost for a certain period? So there's a formula that you guys can utilize not only to figure out your food costs, you can also figure out your liquor costs, your beer costs, your wine costs, and even your merchandise costs. So a couple things you really need to keep in mind is, one, you always need to compare your inventory, your sales, and your purchases for that particular category. So always compare category with the same category. If you're gonna do your liquor costs, you're gonna have to take under consideration your liquor inventory, your liquor purchases, and your liquor sales, always within the same category. So let's go into a little example. Okay, we got out of the way the conversation about menu item costs. So now let's talk about cost of goods sold, or how can you figure out once you're in operation, once you've already set your prices, you've been open for say a couple months already. So you wanna know what is your cost for a certain period. And so this formula that I'm about to teach you works for you to calculate your food costs, your liquor costs, your wine costs, your beer costs, your merchandise costs. So keep in mind, this formula is very, very important, and you're always gonna be using this to figure out your costs. So first thing to figure out your cost of goods sold is to figure out your usage. It's not about how much you purchased, it's how much you used. So your usage, how do we figure out your usage? And this applies, like I said, across the board. So first you need to know your beginning inventory. Then you're gonna add your purchases, and the purchases must be of whatever category we're talking about. So if we're doing food costs, beginning food inventory, plus food purchases for that period of time. Let's say we're talking about the month of January, so we'll have your purchases for the month of January. And then we're gonna subtract your ending inventory, particularly food in this case. So see, we have beginning, we have plus your purchases minus your ending, that's your usage for the entire month. Don't forget, whenever we're doing this calculation, you must always compare same category with same category. So if you're doing food, like I said, food inventory, food purchases, food ending inventory. If you're doing liquor, liquor beginning inventory, liquor purchases, liquor ending inventory, and that's how you're gonna calculate your usage. Now, once you have your usage, how do we get to what is our cost of goods sold? So it's very, very simple. We're just gonna divide your usage by the sales that you created. Okay, now that we know how important it is, inventory, to figure out our cost of goods sold, let's go over some of the basic principles in how to account for food. So the first thing is, what do we need to do before we account? So the very first thing is just to keep your kitchen organized, keep your store, your restaurant very much organized, because that way we can do something that we call create a shelf-to-sheet form. And what a shelf-to-sheet form means is, however you see the foods organized here is how they're gonna be organized in your sheet. That way you're not looking like onion, oh, onion, onion, where's onion? No, you know, if onion is the first thing in your list, onion is gonna be the very first thing in your shelf. In this particular example, say paprika, turmeric, coriander, they're gonna be organized exactly the same way every time we count. And so that's gonna make our life 100% easier. So first thing, like I said, we organize, we have our shelf-to-sheet form, and then we're ready to go count. Once we're ready to count, I'll give you a little recommendation. I personally like, once we can standardize across the board everything in our operation in just one type of unit. I prefer weight measurements. I prefer ounces, I prefer grams and kilograms. It just makes life so much easier for me than, you know, having volume measurements and weight measurements within your same inventory. So since we're doing weight measurements, you must have a really good scale handy. So in order to use that scale, make sure that you're weighing everything, like I said, weight measurements, and we're gonna discount the weight of the container that anything or any product is in. Now that we've ended the counting process, we're gonna finish with something like this. So it's just a piece of paper with a bunch of chicken scratches that our accountant is not really gonna like. So what we need to do after we're done with counting is putting everything into our spreadsheet. So basically, make sure you're typing everything exactly like it is in this piece of paper into your system. Remember, a small typo like an extra zero or one less zero can really affect your numbers. It's not really affecting your bottom line, but it is gonna affect the way you see through your operation. So that's definitely the biggest thing you need to do after you're done doing your inventory. And then finally, we need to totalize. Remember, the accountant doesn't necessarily wanna know how many grams of this or how many ounces of that you have. She wants to know how much money, how many dollars you have in each category. And those categories look like dessert and beverage, dairy, meat and poultry, seafood, grocery. So basically she's gonna wanna know, or he's gonna wanna know, the total amount of dollars that you have in each one of those categories to figure out your food costs, or to actually put together your P&L or profit and loss statement. Aside from beginning inventory, ending inventory, and purchases, there are 3 other factors that can actually move the needle of that food cost, and you wanna know about them. One is waste. So every product that basically we purchase and went to the trash, in other words. So we want to keep track of all of that and account for that at the end of the month. Another aspect of that could be transfers and credits. So basically, transfers are products that you got, that you utilize in your kitchen, in your food, but you didn't pay for it. So you wanna make sure you keep track of that. As an example would be if you ever utilize cooking wine or liquor. So every time the bar sends something to the kitchen, we wanna keep that track. And so like I said, we can we can give that transfer at the end of the month. And then another example, which is kind of the opposite, is a credit. So that's every time we put out food that we didn't get revenue for. See, this is kind of a big deal. Every time you're giving out food and not getting revenue, that's certainly gonna affect your food costs. So if we're doing a fundraiser or a catering, that's really like a marketing effort. And so we're putting out all of that food, but we're not getting that money. We definitely want that form that's gonna give us that credit at the end of the month. Like we say it in kitchens all the time, no ticket, no taco. Is that right, Chef Danielle?
Yes, Chef.
Well, before we go into a practical exercise, let's talk about purchases for a brief moment. Since, like I just told you, purchases is one of those elements or components in that formula that helps us calculate your cost of goods sold, I think we should understand a little bit more about purchases. So there's just a few things to remember. First one is our purchases must be tracked all the time. We can't just, track a couple invoices here and a couple invoices there. We have to do it constantly, all the time. Why? We have to do it all the time because prices change. And so we want to make sure that every time we extend our inventory, we're utilizing our most current price. That's one reason. The next thing you want to keep in mind is always itemize your purchases. You don't want to just input a full invoice and put the total amount when you're tracking your invoices. You want to make sure you go line by line, and that's just because you don't want to have in the same sheet, or you don't want to combine food purchases with liquor purchases, with beer purchases or merchandise purchases. We want to keep all of those separate so at the end of the day or at the end of the month, we're actually able to figure out our cost of goods sold in each one of those categories separately, and then obviously combine. And then finally, just remember anything that has to do with accounting, like they say, is garbage in, garbage out. So if we put bad information in our system, we're only gonna get inaccurate numbers. So there's so much energy and so much work we're putting into figuring out our food costs. So this last part needs to also be accurate. Okay, we've already gone over all the principles of food costing. So what about we go over a practical, real-life exercise? So you've already seen a real restaurant. So let's put together some real numbers. So for this exercise, we have restaurant X, right? And we're gonna have revenue, we're gonna have purchases, we're gonna have initial inventory, we're gonna have final inventory. So the first thing we need to figure out is, obviously, like I mentioned before, their usage. So let's use the month of January as a practical example. So for the month of January, to figure out our usage, we first need January beginning inventory of food, then we need January purchases of food. After that, we need our January ending inventory of food, and that way we can figure out our usage. So as an example, right, let's say we started our month with $7,500 or $7,500 of beginning food inventory. And then let's say we had a $37,500 worth of food purchases. Again, it's just food purchases for that period. And then finally, we did our inventory at the end of that period, at the end of January, before we started selling anything in the month of February. And we had $9,000 of ending inventory. So that gives us our usage, or a usage of $36,000. So those $36,000 is what we need to then divide by our food sales for that period. Let's just say we had $120,000 worth of food sales for the month of January. So that tells us that our cost of food based on usage, your actual food cost, the big number, the real number, it's 0.3 or 30%. And that's how you figure out what is your cost of goods sold. Basically just combining the same exercise, food, then wine, then beer, then liquor, then merchandise. I hope you really enjoyed this practical exercise and I was able to explain to you what food cost is and why is it so important. I wanted to basically summarize with a few items. Number one is food costs. Just like labor costs is one of the two biggest expenses in the restaurant industry. And you, as a chef, kitchen manager, owner, general manager, have the total ability to control those percentages. So that's the first thing. The second thing I want you to keep in mind is it affects directly not only the restaurant profitability, but also yours. Because often, a lot of management or managers' bonus structures are based on food costs, labor costs, or like I said, prime costs. So not only affects your restaurant, it also affects your bottom line. And third, it's very important, it's something that's just helped me so much over these years is accountants, or information that we get from accountants as a chef, or P&Ls, profit and loss statements, should not be information to you guys. It should only be confirmation. You already have all these numbers. You have the ability to figure out where you're at and see through your operations. So remember, accountants and P&Ls should only be for you a confirmation, not information. And finally, just think about it. It's not so complicated. If I can do it, you guys can do it. So thank you so much for watching. I'll see you next time.